Hi, Jonathan York from Bay Financial Partners, looking at investment markets. Still sort of ongoing issues for the Trump presidency with the investigations. Little fresh news has come out of that so far, but it's still sort of ongoing and really just causing a little bit of embarrassment for the presidents. As discussed, the market seemed to be pretty much ignoring it. You saw the expected increase from the Fed, and they signaled there will be at least one more hike before year end, data permitting. And that seems to be the way of it. Certainly the US economy is pushing along at a pretty good rate. Earnings are okay out there. Growth is it's not great, but it's pushing along at a reasonable rate. Obviously unemployment is very low. And that all sort of points to one further rate increase before year end. Obviously, the big caveat on that will be the data. Certainly if that employment report starts to turn around and you continue to see a little bit of softening in inflation, then it may cause the Fed to have a little bit of a rethink. But certainly they made some pretty good points that that they are looking to increase rates and get rates back to a more normal level. More interesting as well, they started to talk about when they might start to shrink their balance sheet. It's probably not going to go back to sort of pre-GFC levels, but certainly they are looking to reduce that. So as bonds come up for maturity, instead of replacing them, and just going to let them sort of run off the books, and that'll help reduce the balance sheet. Oil's still pretty precarious out there. It's sort of fallen back below $44 a barrel now and really looking pretty dire. As discussed here many times, it is a supply-demand imbalance. You've got a reasonable number of wells out there, certainly in the US on the shale oil fields, that can be sort of switched on at pretty sort of quickly. And certainly if prices have risen, we've seen that coming through. Brexit negotiations have started as well, and it's looking pretty dire for the UK at present. You're sort of stuck in this state of limbo where technically you haven't got a government at present. Theresa May's Conservative Party didn't get enough to get the majority in Parliament. They're trying to sort of stitch up and patch up a deal, but negotiations have started and really put the UK on a bit of the back foot already. Interesting though, Eurozone equities, trading up at sort of lifetime highs, certainly on the German tax, and there's pretty good inflows going into those European stocks. As we're starting to see growth come through, the ECB has sort of finally got its act together and doing what it's supposed to be. Sort of quantitative easing is sort of helping, obviously the low interest rates, and really at present again they look to pretty good conditions out there for continued equity outperformance. Here in New Zealand, coming up towards the end of KiwiSaver year, you need to make sure you've got your contributions all up to date to get that maximum tax credit. So if you are unsure what those numbers are, call us on 0800 867 323. Also as well, for those investors looking for income options out there, there are plenty of alternatives out there. And if you're interested in discussing what's available, call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles. And we'll look forward to speaking to you soon.